This is Dan Dix here reporting for Press for Truth. We got a great show lined up for you today, my friend, so let's just jump right into it. Joining me on the line today is David Moadel of PortfolioWealthGlobal.com. David, thank you so much for taking some time to speak with us today. I want to get your breakdown of, there's so much going on right now in financial and economic news, so I want to get your views on what's been going on with gold. You've also got some interesting ideas about the millennial demographic and how they currently operate that I want to get you to break down. But before we get into all that, maybe we could start with the U.S. bull market. Right now, I've had a lot of guys on this show, David, who have predicted the end of the stock market bull run in the United States, and they have been wrong. So what is your take on the current equities bull market in the United States today?
Well, first of all, Dan, thank you so much for having me on your program. I'm a fan, and I really appreciate this opportunity. Yeah, bull markets. Predicting the end of a bull market I think it's impossible. No one can ever know because, look, it only takes one person, just one buyer to say, you know what, I'm not willing to pay any more for this. And it only takes one seller to say, hey, this is high enough, and everything changes. That's the top. No one can ever know that trade when it's going to be what it's going to be. What we can do as investors is to understand that a stock market is basically a market of stocks. That makes sense, right? It's a market of businesses. And every day we get to go in, during market hours at least, and go through it and pick and choose which businesses are attractive to us. Now, if nothing is attractive to us, what we can do is nothing. We can sit on cash and do nothing. That's okay. Or we can get into investments that are outside of the stock market. Look, we live in a relative world. In other words, if cash is eroding at, let's say, 2 to 3%, that's the inflation rate typically, we don't want to be sitting on 100% cash because that's counterproductive. So one of the reasons this bull market is continuing is the fact that if a company, let's say Procter & Gamble, Kimberly-Clark, AT&T, if that's returning 4, 5, 6% between their dividends and the price appreciation, that's obviously much more productive than losing 2 to 3% just sitting in cash. So the default position for millions of people worldwide right now is to own the S&P 500 or the NASDAQ instead of cash. As they say, TINA, there is no alternative. Now, in a different world, in a different scenario where interest rates are free to be explored by the market, you'd have higher interest rates right now and bonds would offer better yields. And people would actually have a choice, imagine that, between stocks and bonds. But the way it is right now, the choice is overwhelmingly stocks. So the bull market is not continuing because stocks are attractive in general. No, it's because they're relatively attractive compared to the other choices, the other asset classes. Whether it's real estate, bonds, fixed income, commodities, stocks are the place to be right now. Look, we live in a relative world, and if you can generate 7 or 8% in a world where interest rates are very low, you're going to choose the S&P 500, which has companies that are growing at double-digit rates. You're going to choose that over cash and definitely over bonds. So what you need to do is figure out how much exposure you want to have to the stock market. Because after a 9 or 10-year-old bull market right now, you're not seeing any really attractive companies. Therefore, you don't need to be 100% in stocks. That's not what I'm saying. You need to figure out how much you want to be in stocks. And in our newsletter, PortfolioWealthGlobal.com, has a newsletter. People can sign up on the homepage. And Tom Beck, the chief researcher, he puts out a bi-monthly update. That's every 60 days or so. And he tells the subscribers what his personal allocations are, what his biggest positions are, what he's invested in. And that's how I keep track of the best stock picker in the business, I think Tom Beck is. I get to see what he's doing with his own money. Also, if people want to go to portfoliowealthglobal.com/crash and portfoliowealthglobal.com/portfolio, they can understand exactly how he does this, how he's invested, and how I'm invested right now.
Oh, well, that's fantastic. I mean, I often do the same things. I look to those who have experience in this space and, who have a proven track record. And then we, follow their example. And right now, I'm very interested in what these people have to say about gold, because for me, it feels like we're almost as if there's, I don't know if there's heavy manipulation going on or if we're about to reach a bottom or what, but something feels like it's undervalued and things are about to change. What do you think? What is the current state of gold, and is that a good way for people to diversify their portfolios? Should they be maybe looking more into those kind of markets and maybe be a little leery of the stocks?
Yeah, that's a great question, Dan. Look, it's tied in the gold, commodities, it's all tied into the US dollar. Right now, the dollar happens to be very strong technically because as a currency, it happens to be favorable to all the other developed currencies of other developed nations. If you look at other developed countries, talking about Japan, Germany, or the European bloc generally, you look at the major currencies like Switzerland, no one is paying as high an interest rate like the US dollar. So there's right now a rush to the dollar, that's true. And institutions are not inclined to invest in physical precious metals at all in modern times. That's just the way it is. So this is important to understand that when one fiat currency is so overwhelmingly positive in terms of interest rates and what it offers for people's investments, you're going to see a rush to that. And now what will happen what is going to happen when the euro starts raising interest rates, when Switzerland starts raising rates, Japan starts raising rates, what then? You're going to see a rush out of the US dollar, and that will have a very positive impact on gold. But until this happens, there's going to be a problem. Now, the only thing that can help gold in the near term is if things stay as they are, is if inflation goes higher, and then current interest rates will not be sufficient to hold back. At which point the central bank will be in a jam because they won't be able to raise in the same way they did it back in the 1980s when the U.S. was a booming economy, one of the biggest creditor nations on the earth, not the biggest debtor nation like we are now. We were a country with we had a great political system, if you remember back then, a booming economy, and not only that, but a great demographic outlook. With fewer retirees, and a lot of people were in the working class, a lot of people in the workforce. That's not the case today. And therefore, if inflation becomes a problem in the U.S., it will create a situation where people will own more gold. You can count on that. So for now, if you don't have any physical gold, I suggest doing what I do. I take about 2 years of my expenses and I convert that into precious metals. Now, if you want to speculate on top of that, which is fine, on top of this insurance that you're creating yourself with the physical precious metals, you can do that by either owning more precious metals. That's one way. Another way is to wait for a crisis and then invest in the crisis, or you can also take strategic positions in mining companies. But look, only a select few, because as a sector, they're horrible right now. So you need to find the right ones. They can really make a difference in your portfolio. We can help with that. If you go to portfoliowealthglobal.com/gold playbook, you can get a full report on how exactly you can invest in the precious metal sector. Look, I'm not saying rush to buy gold. It could easily go below $1,000. But this doesn't change anything to regard with what gold really is and what it represents in times of crisis. In US dollar terms, it might be going below $1,000, but in other currencies, it's going to 52-week highs or even all-time highs. So if you're in the U.S., it might be affecting your portfolio negatively right now, but in other regions, it's not. So you have to think internationally because gold always has been an international currency.
Yeah, I absolutely agree. And there's kind of a new digital gold, so to speak, that's come onto the scene that a lot of people are talking about. Of course, we're talking about Bitcoin and various other
Yep.
cryptocurrencies. So moving forward, I just want to briefly get your views on this concept of decentralized currencies and being able to operate outside of the system, outside of the government or the big banks. Do you see this as a viable way moving forward for people to free themselves financially? And how do you feel about the current Bitcoin market?
Look, Bitcoin is showing some signs of stabilization right now. Thank goodness, right? Okay, so if you've been in Bitcoin since, let's say, December, you're hurting right now. and you are the victim of FOMO, FOMO, fear of missing out. You saw it go from a few dollars a few years ago to almost $20,000 per Bitcoin. And that's when you got in. And a lot of people got in at the wrong time, unfortunately. A lot of the neophytes got in at the top. There was no way of knowing that it was the top, but personally, I don't buy after a quadruple digit run up. That's not how I operate. That's not how Tom Beck operates at Portfolio Wealth Global. That's not how we do things. The way we do things is we wait for better opportunities. Buy in the red, sell in the green. Also, if you believe in the blockchain and you believe in the HODL movement, hold on for dear life, then you really shouldn't have anything to worry about if your perspective is long term. A lot of people who are panicking, they didn't think about their perspective. They didn't think about how long am I going to hold this. They just thought about how much money they could make rather than how much they could lose. You know, Warren Buffett is famous for saying, rule number one, don't lose money. Rule number two, see rule number one. Okay. So if you follow that perspective, then you're taking a reasonable position size. If you believe in the blockchain, if you have a long enough term perspective. Now, remember, Warren Buffett, his favorite buy and hold time is forever. He's actually said that. So are you going to hold forever, or are you looking to swing it as a swing trade? Are you looking to day trade it? People didn't think about this before they bought in. They bought in at the top. And since they don't know their time frame, they're freaking out. You don't have to freak out. I believe in the blockchain. I believe in cryptocurrencies, generally speaking. Does that mean that I believe in every cryptocurrency? No, most of them will not survive. That's the reality of it. I don't just buy any old ICO that I see popping up out there. If I go on World Coin Index or coinmarketcap.com, oftentimes I'm looking in the top 21s on there. Just like when I do a lot of investing, I'm looking at blue chips. I like to buy the blue chips of the cryptos, all right? That doesn't mean I won't buy ICOs. I will. I'm very selective. I'm very picky. But there have been a dozen Bitcoin crashes of 30% or more. We're having one right now. This one's in the headlines, and so it seems bigger than it really is. And the prices themselves are bigger, okay? But all those previous crashes, even though the prices were smaller, they were just as big or sometimes bigger in terms of percentage loss. So you have to pull back the chart, something I believe in doing. You got to look at the long-term perspective and ask yourself, what is your time frame?
That's a good point. You know, just when you take a step back and really look at this on the grand scale here, things are not as bad as we think they are. I mean, yes, sure, if you got in December, yeah, it's looking kind of bad right now. But like you said, people need to be thinking a little bit more long term when it comes to these decentralized platforms. And I'm not so sure if that's what this millennial generation is doing or not. So maybe you can help us understand that. What are they doing wrong? Because it seems that there's something going on in the housing market. There's a lot of millennials sitting around at home, living with their parents. I mean, something's up with this demographic. Where do you see them going wrong, and how do you see them fixing it?
Well, it's easy to pick on the millennials, and I know you're not doing that. But look, regarding the millennials, people are discounting. They're discounting their purchasing power, and the fact that they're earning their peak. They're entering their peak earning years right now. So investors around the world who are picking on the millennials, they're missing out on a prime opportunity here. Right now, there are more millennials than baby boomers. Did you know that? Yeah, there's 80 million millennials and 77 million baby boomers. So we're talking about a huge demographic group in the United States that is just starting to earn now. And look, in terms of demographics, the U.S. right now, there are more 35 to 49-year-olds than 19 to 34-year-olds. So this means that wages, I believe, are going to go up. The workplace is becoming more specialized. People have more work experience. They're demanding higher wages, and they'll have more discretionary income going forward. And that wasn't the case from 2000 to 2017. It's a new phenomenon, and this explains why for the past 17 years or so, the U.S. has had to create all these bubbles, all these artificial bubbles, the real estate bubble, stock market bubble, in order to get returns for the economy. Because demographically, what should have happened is a severe inflation, but they have a central bank and a printing press. They were artificially postponing the crash that should have happened. Yes, they had a crash in 2008. And I believe there will be other bumps in the road. But overall, in the next 9 years, you're going to see a real boom in the United States because real wages are going up. Real wages going up is the only reason that the US dollar has severe inflation in the first place. So, in the past, when real wages were going up in the United States, you've seen across the board inflation, which is inflation on everything, not just tuition, healthcare, education, asset prices. We're talking across the board inflation. And this is great for commodities prices, going back to gold. The second thing about millennials is they support organic food companies. Anything that's all natural, that's what they're buying up. They're not into sugary, carbonated foods and drinks, things like that. They're not into it. And actually, at Portfolio Wealth Global, we found a company that has really emerged from two worlds: the cannabis industry, which we're bullish on, and the all-natural functional beverage industry, which is really exciting right now. If people go to portfoliowealthglobal.com/Koios, I'll spell that KOIOS, /KOIOS, Koios, they can find out about the number one company right now in that space that is going to the moon, I believe. It's a tiny company, market cap around $8 million, but its competitors have been sold to Pepsi, Dr. Pepper, and other beverage giants for $500 million to $1 billion. So the sky really is the limit here. So, you know what, if you're thinking about picking on millennials, I've got a better idea. Invest in them. They not just are the future, they are right now. Huge earning potential.
So opportunity to milk it more than anything, really. Yeah, yeah. That's not a bad suggestion, really, and that makes perfect sense to me. So, I'm going to encourage people to check out those links. We will have them located in the description. Where else can people go to learn from you? I mean, are you guys on social media? Do you have a Twitter and a YouTube? Just if anybody's just learning about you for the first time, where can they go to follow your work?
Thank you for asking. Yeah, my name's David Moadel. They can email me anytime at davidmoadel, Moadel, at gmail.com. And if people just want some direction, how to approach buying gold or gold miners, silver and silver miners, things like that, cryptocurrencies, bonds, which I think are toxic right now. And we have a report on that, Portfolio Wealth Global .com/bonds, BONDS, about better alternatives, better yield than buying bonds right now, which I believe are going to crash. They're going to crater. You can quote me on that. And if they just go to the homepage, sign up for the newsletter at portfoliowealthglobal.com, you can get Tom Beck's picks. You can get his latest reports. I mentioned /portfolio and /crash. Those are great places to go. Also, we just put out a report, portfoliowealthglobal.com /Calicoin, CALICOIN, Calicoin. There's this huge threat to the dollar. We did talk about the dollar. We can keep talking about it if you want to. People think that the biggest threat to the dollar is cryptocurrencies or the United States debt. Maybe even inflation. Well, that's all reasonable to think, but there's actually a bigger threat coming. It's not coming from the trade wars with China. It's actually coming from state governments led by California who are creating their own currencies, and it's going to be based on cryptocurrencies. It could cause the next worse than 2008 recession. So /Calicoin. People should check that out. But again, people can contact me anytime by email. I'll give them some really amazing resources to help them because, folks, you got to think for yourself. If you're counting on the central banks, the big banks, the fat cats, the U.S. government to take care of you, if you're counting on Social Security, pension funds, 401ks, 403bs to take care of you, you got another thing coming.
Absolutely. I mean, I've always said that it comes down to you ensuring your own wealth, not putting that trust and faith into these other parties. However, you guys have a proven track record, which is why I'm quite confident with having you on to tell people about what they can do to protect themselves. So once again, ladies and gentlemen, please check the links in the description if you want to find out how to protect yourself as a hedge moving forward for the inevitable dollar crash that we here at Press for Truth have been screaming from the rooftops is not just inevitable, it is coming, ladies and gentlemen. So the time to protect yourself is now. David Moadel, once again, thank you so much for joining us today.
Thank you so much. I appreciate it. Thanks a lot.
We all want truth. The truth will set you free.